Hello, Aaron. Welcome. Hello, everybody. Okay, I'm waiting for Al to request to join the live, and then we will get underway.
I found the request button.
There we go. How you doing?
I'm doing great. Thanks for having me here, man.
Yeah, my pleasure. Thank you for joining us
Yeah,
on this
you're welcome.
beautiful, beautiful Friday morning.
Isn't it? I'm sitting right at the patio door. I can see the wind blowing. It's got, it's picturesque.
Yeah, a little bit of snow fell, just a little bit, but not too cold. Looks good.
Yeah.
Okay, we'll give it 2 more minutes here for people to mosey on in.
Oh, you got it. Oh, I see Cindy there.
Yeah,
Hello.
we had, yeah, I chatted with Cindy last week, I think,
Yeah,
which was
that's
great.
cool.
So that was a great conversation. I'm looking forward to another good one.
Awesome. Fantastic.
Okay, we'll give it 1 more minute here, and then we'll get underway.
You got it. I was stressing out there for a second. I saw the I button. I'm like, oh, where do I press? And then finally something showed up.
I know the fear. I had some fear this morning. Uh, okay, good. We got some people rolling in.
We
Okay, so
do.
let's kick it off. And if anyone else joins, that'll be great. They'll hop in midstream, and of course, after we finish the conversation, we'll post the entire thing. So for anyone who's watching all of it later, they'll get the benefit of all of your wisdom.
Thank you, sir. All right, you lead the way.
Okay, so for everyone who's here, thank you so much for joining us again. Um, very excited about this conversation to talk to Al, a veteran of the insurance industry, a wealth of knowledge, a wealth of energy, the perfect person to talk to on this Friday morning. So, Al, I'll let you introduce yourself the way you want to, and then we can hop on into a conversation.
Thank you, Daniel. Awesome. All right. Well, so I'm Al, one of the managing partners at Longevity Achieved. We are a boutique insurance and investment firm. And yeah, we try to simplify, not try to, I think we succeed really well at simplifying the complex world of life insurance. And as you guys will see, there's a lot of different questions um, that we come across. And so our goal is to make it an easy process and make it available to everybody. And a couple of things I want you to know is in our brokerage, we make it a mission to have, everybody just really empowered by leadership. So we've got 12 different languages at our office. Our CEO her name's Ashley Lalonde, powerful, woman in charge. I want to scream that from the rooftops. And our management team we're mostly visible minorities. So it's like just the gamut. We're a little bit of everybody. So that's what I want to say, Daniel.
Awesome, welcome. Well, I'm excited to chat with you.
Thanks, man.
So you said a big part of the mission is to simplify life insurance, and
Yeah.
so I think that's a perfect place for us to start. So someone comes in, they meet you for the very first time, and they hit you with the obvious question: do I need life insurance?
Yes.
Where do you go from there?
I say yes. That's my answer. it's it's crazy because I'm biased, right? I think everybody needs life insurance, and of course I would say that because I'm in the insurance industry. Except that it actually holds water, like it's legitimate. Whether you're starting off and you need insurance for, can you hear the dog?
Just a little bit. That's all right.
I told you, man, he's gonna be there. So whether you need the insurance for keeping a promise. So if you're just starting off in life and, a mortgage is a promise, a baby's a promise, whether you said it or not, you're getting life insurance to keep that promise. That's one part. or you're at the end of, you're kind of rounding out your career. Maybe you don't have those same promises that you have to fulfill, but now you've got a little bit of money and you're going to have some tax problems. Well, you have a promise to the CRA. So we can manage all of those promises in advance, and we use life insurance to do that. So that's why I say yes.
Yeah, so let's start with that first sort of set of promises. Mortgage, children. So someone who's coming in who's looking to sort of, using your words, make sure that they're prepared so that they can continue with that promise if something were to happen. What type of policy do you recommend, or what type of policy do you think makes sense for someone in that situation?
Yeah, I think when we're starting off in life, there's two types of insurance, if we want to put them into two big categories. One category is permanent insurance. So that's insurance that lasts forever, even if you live to 1,000, okay? Now, we'll see which generation gets there, right? And then the other part of the insurance is called term insurance, okay? And I learned recently, even though I've been in the business, it's not temporary insurance, it's terminating insurance because it ends, right? It's term. So you pick one or the other. Now, if you have a need that has an expiry date, okay? So like I want to take care of my kids until they get to 25 or 21 or 18. That's got an expiry date. So then you buy terminating insurance that ends in and around that time. And basically you're renting the insurance. So it's much cheaper when you rent it. And that's what I would advise for people just starting out. Get what you can afford, what you can comfortably afford right now, because it's better to cover the whole need and not put yourself in a matter of, really straining yourself. That was my long answer. Sorry.
No, it wasn't that long. It wasn't that long. And so with term insurance, let's dig in there for a moment. So as you said, it's terminating, which means that at a certain point in time, it's no longer there for you. Yes. If you outlive the term, there is no payout, and like you said, you're renting it, and that's why the premiums are less. When people start thinking about how much they need, how big should the policy be? If that's the question that you get, I've got a newborn, and for me, 18. Once they're 18, that's the number that's important. If someone were to say that to you, so how much insurance should I take out on a term policy that's set to expire around the time that my child turns 18?
It's such a good question, and I think that's the part where you want to do some digging and do some looking for yourself, okay? It's going to be based on a lot of different factors. And one of them is the lifestyle that you want, that you want to maintain for your loved ones. God forbid if there was a loss of life or something like that. And then you also got to factor in the other promises. So the mortgages, the parents, I want my child to go to school, or I want to buy a car for them, or, what have you. You got to figure out what you want. And so that's the kinds of conversations that you'd have. Is there a quick formula? They exist, okay? But if I could break it down, it would be, okay, how much do I need per year? Probably $25,000 for a child, right? And then I would add a little bit of education, and then add whatever I wanted to make available for them. So if my desire is to help with their first down payment, well, okay, I'd put, $150,000 in the life insurance policy for that, okay? You'd be surprised. We'll call it, the value, the future value, your ability to earn an income, how big that number is, right? So for whatever you're making right now, think about it, times 20, get 20 years. It could be $1 million, could be $2 million. So It's a big number. Yeah.
Interesting. And I know from sort of being in the world of estate planning that people often struggle with these conversations. They struggle with the idea of dying. They struggle with planning for death, with actually saying it out loud.
Yes.
My experience is that with estate planning and making a will, people struggle a little bit more, or at least, I've heard some people say that sort of the marketing around making wills isn't as strong as the marketing around life insurance.
Oh yeah.
So, but do you still find that same thing? Are people struggling with these conversations? Is it difficult? And then do you find that there's a point in time in the conversation where people turn a corner and it feels less taboo and uncomfortable and more just prudent planning?
Yeah, it's such a good question. I think everybody knows they need it. Like, it's one of those, oh, I have a baby, I need life insurance. I bought house. I know I need life insurance. Oh, I'm adulting, right? Like sometimes I'm talking to people and they're like, okay, this feels like my first real adult move. So we all know we need it, but I mean, who the heck wants to talk about the end of their life? Nobody,
Right.
So I think it's important to speak with somebody who's willing to or able to kind of lighten it up. Sometimes I have those kind of morbid conversations, but that's my job. I got to bring that to the table.
Yeah.
So I forgot what you initially asked me, but that's my answer.
It's a great answer.
Sorry.
No, that is the answer. Which is, yeah, it can be difficult for people. But when they're dealing with you, it's such an important thing to do that I think
Yes.
people can quickly get past the discomfort once they start, right?
No,
Like,
exactly. And
yeah,
I will add to that. It's like if you're talking about end of life, then that's a conversation that gets kind of, it's not fun. But if we're talking about what we want to happen during our lives and to ensure that we're using insurance to make sure it happens whether we're here or not, now it's a conversation for what's possible. Now it's a conversation for, making things available no matter what. So that's a happy kind of conversation.
right.
Yeah. And I
And
want to
so,
I want to just piggyback that too is I know you're the host. I'm sorry, man, but
no, let's do it.
I said 1 million or 2 million, and a lot of people will say, "Oh my God, hundreds of dollars." No, if you're in your 30s, insurance is based on the likelihood of the event happening in the next year or day. We're all, if you're young and healthy, you're probably going to live for a very long time. That kind of policy is $30, $40. Like it's very affordable for people. So, I mean, at least start the conversation.
Absolutely.
Yeah.
So for you, sort of on a more personal note, before you got into the life insurance business, like what was your early exposure to the idea of life insurance? Like how did you feel about it then, and how do you feel about it now?
Oh man. All right. So I bought my first insurance policy. This is of course an insurance broker's answer, but I bought my first insurance policy at 18 years old.
Okay.
Okay. I bought a whole life policy and I wanted $1 million policy because I said I'm a million. My life's worth $1 million. Like it was an ego thing at the time, right? But what drove the conversation is my mom had me at a very young age. So I was born when she was 15. So she was pregnant at 14. Okay.
Wow.
So she's like my best friend. I mean, um, did I get cut out there? Are we still? Yeah, good. We're
Yeah,
together.
I think we got cut off for a second.
Perfect. So because we're so much older than my mom, he's about 12 years older than her. So I thought to myself, oh my goodness, what happens if something happened to my dad and I would be in charge? Like I would be the man of the house now. So I needed to do something about that. And then I thought, well, what if I was gone? What would my mom do then? And that's what drove the conversation. So I immediately sought out life insurance. So that way, if anything happened to me, my mom would be taken care of. But get this, so I speak to the advisor and I say, I want $1 million. She's like, you'll never get $1 million policy. Why do you need $1 million policy? So the poor lady, her name was Sandy Thays, she had to sell me down, like she was down selling me. It's like, you want too much, you want too much. So that's how it happened. That was my first exposure. I wanted to take care of my mom. Yeah.
Wow. And so that as a whole life policy, that policy is still in place.
Get this. So before I got into insurance, I had another advisor come to me and say, Al, you have this whole life policy, but you don't have a whole life need. You have a term need.
Mm-hmm.
So then I ended up canceling, but I canceled that policy and I bought a different one. But that was, I'll say bad advice. But I took it. I didn't know any better at the time. But now I
Sorry,
know.
bad advice to cancel?
Yeah, because I had already had it for a few years. It was a good price because I got it when I was 18 years old. I mean, right now I'm 35. If I had that policy, oh my goodness, it would be great. But because it's so much more expensive now, because insurance gets more expensive as you get older. So that's one of the value of buying it younger too. Yeah.
Okay, yeah. So let's two questions. One going back,
Sure.
and then I want to ask the question about what you just said in terms of it getting more expensive as you get older, and that being a reason to do it. But the first question is, as an 18-year-old, talking to your friends, telling them that you bought a life insurance policy, would you have been the only one who was doing something like that at that time?
I think so. There might have been one or two others, or but at that time, it was a unique conversation. I just wasn't surrounded with people having that kind of conversation.
Right.
Yeah.
Okay, so now let's talk about what you were just saying, that it gets more expensive over time.
Yes.
So, one of the interesting things about life insurance in the industry, really any industry where someone is not selling something to you, that's the wrong term. But in life insurance, if you're dealing with an advisor, there's an incentive to the advisor to you getting the policy, in the same way that there's an incentive to you as the person who's getting it, because it is good for you.
Yes.
And one of the things that people hear often is that it's cheaper when you're younger.
Yes.
Which that's what I want to talk about. So notwithstanding that that's true, sometimes it can also sound like someone saying like, no, you should do it today.
Yes.
And then people wonder like, but do I need it today? So
exactly.
Yeah. So let's talk about that a little bit.
Yeah. So we got to acknowledge that there's a bias, right? Somebody will benefit from you purchasing a policy has an interest in you purchasing the policy. Okay.
Yeah.
Clear. So now, if you're working with somebody who will say for I don't know the word, but their title is advisor. Okay. Like really, it's our duty. If, we're being members of advocates, being an MGA, it's our duty to do what's right for the client above and beyond the commission that would be made, because we're a commission-based business, right?
Yeah.
So that's clear there. In the long run, an advisor who sets themselves up in that perspective does better over time.
Right.
Because, we're just going to give you what's appropriate now, and you'll be a client forever, because it's an advice-based thing. Like my job, I really want to quarterback your financial life. And ideally, we'll know each other for a long time, and then I'll do business with your kids, and my kids will do business with your kids, and it'll be like that. That's way better in the long run. So now, if we can get with that and understand that there's a bias, even if there's a bias, that doesn't make it not good for you, right? Because God forbid something happened, you'd have the life insurance, and it's highly affordable when you're younger. And now, if you bought that whole life policy that I bought when I was 18, it's almost tripled in cost now. If I wanted to rebuy the same thing, it would cost me almost 3 times. But like I said, knowing what I know now, I wouldn't have canceled that policy for the world, right? So that's a totally different conversation, Danny. Then we're going down the convo of insurance as an investment. Do you want to go down that road?
Not yet.
Not yet. Okay, good.
Not yet. We can. But first, I just want to touch on the cost discussion, which is, am I right to say that it's a math question? So the younger you are, it's a math question. Can you hear me? Did I cut out there?
I missed just the first part of your question.
Okay. So am I right to say that really this is a math question? So the life insurance company looks and says, if you are younger,
yes,
there is a smaller chance that you are going to pass soon.
Yes. I can't wait.
And so is this the sort of simple answer to why is it cheaper when you're younger?
Yes, I'm going to say 2 things about this, okay? I actually really love this. This is one of my favorite parts of insurance, okay? So the insurance companies are a business, period, okay? Even the ones that want you to live healthier, live better, it's still a business. It's a profitability thing. So let's get clear on that. The human-to-human aspect, that's with an advisor, but the insurance company, it's a profit thing. Now, no problem. We can't wrong them for that. Businesses exist for that reason. So insurance is based on the likelihood of the event in the next year. So when you're 20, what's the likelihood that you'll die by 21? Forgive me for being so blunt, but that's what it is. And if you're 65, what's the likelihood? It's much higher. So insurance will be higher for a 65-year-old than it is for a 21-year-old. Okay, so now put that aside for a second. Insurance, I was at a meeting with a gentleman, okay? He's from Jamaica, and he says, I don't need to worry about this insurance thing. We have something back home called partner. I said, okay, what's partner? So he explains it to me and says, in our community, everybody puts in $20 or $100 or $200, whatever that number, every community picks their number. And every week, one person gets the whole pot, okay? So, but you can get, after 52 weeks, you'd get all your money back, but you'd get it back in one shot, right?
Yeah.
So effectively, they create this kind of savings plan where everybody gets a windfall once a year, but chips into it. That's the same thing with insurance. See, you buy a policy, I buy a policy, and everybody in Mississauga and Toronto buys a policy. We all put the money in, right? And then when one of us needs it, we're the ones who pulls it out at that time.
Right.
That's the whole concept of insurance. It's everybody coming together, and then we're giving the money to the person who needs it. And so I think that's the community aspect of insurance is just, it's lovely. You know, so anyway, the business is the business, but the community aspect of it is a whole nother level for me.
Yeah, no, I mean, it's probably not the way that people often think about insurance.
No, they don't. Don't. Somebody said LOL. Jamaica's in there. They know exactly what I'm talking about. Yeah.
Okay, so maybe now let's chat about, as you said, insurance as an investment.
Yeah.
So
yeah.
Let's talk about that a little bit. So to me, we're now no longer talking about term insurance. Is that right?
We're not talking about, that's right. No term insurance for investments.
Yeah. So when we're talking about insurance as an investment, the idea is that the policy that you get, there is a guaranteed payout.
That's right. No matter what, it's going to get paid.
This is
That's
whole
right.
life. So no matter what, this is going to get paid out.
That's right.
And now what we're talking about is how you use that to your advantage. Is that right?
That's right. That's right. That's right. And so in this case, you're giving the insurance company a prescribed amount, okay? And by, at some point in your life, you would have put in a significant amount of money that the insurance company would have said to you, okay, well, we're going to pay you out $1 million if you died early, God forbid. Or if you, live on and you live a long-lived life, you'll have at least what you put in a cash value, okay? So we don't want to go too deep into it because there's a lot of different trenches to go down. But the easiest way to put it is when you invest with an insurance company, you're giving them your money and they're giving you back a promise for, we're going to give you a large sum of money if there's a loss of life, or we are promising you a 5, 6, or 7% return year over year, okay? Now, they don't use the word promise, but over 100 years, they've been reliable to deliver that. The point here is that it's not connected to the other stocks. It's not connected to the market. It's not connected to economic events because insurance is a long-term play. So we call it a non-correlated asset class, and it's not correlated to anything because no matter what's happening, 2008, what happened last year, what happened, whatever's going on in the world, it doesn't do the whole ups and downs that regular investing does. It's just nice, flat, and steady. It's not correlated to the rest of the market. So I would use it as one way to diversify your investments.
Right. Very cool.
Yeah.
Okay.
Is that good?
Yeah. That answers the question. And I think you're right. I think it's not the right time to get too deep or too in the weeds, but it's just important.
Not with 5 minutes.
That's right. That's right. It's just important to understand that. And if we sort of bring this all the way back to the beginning of the conversation, term insurance serves a particular purpose at a particular time in your life. Whole life insurance serves potentially a slightly different purpose, and there's a different upside, I'll say, in terms of the investment aspect, but you pay for that.
Most definitely you pay for it. And I'll give one more piece just to make it, because there's got to be some allure, right? Let's create some mystery around it. You ready?
Yeah.
So for people who want to use, if you're not in a conversation for my family or people will be at a loss, like financially, if you go, then you're probably in the conversation for whole life insurance, okay? So here's the tidbit I'll leave for you. There's 4 things in Canada that interact on a tax-free basis, okay, where you can, make something and not pay taxes on it. And that's, your TFSA, that's your lottery winnings, okay, your principal residence, and the 4th one is life insurance. So you want to get, why does life insurance fit in that category? Well, if you've got some money, you want to be in that conversation. So find an advisor. There's my mystery. That's my trailer for the next one.
Okay, that's good. That's a good carrot to leave out there. So because you bring up taxes, I'll just ask one more question, which is people using insurance to help pay a tax liability after they're gone. Yeah. So we're now probably talking about someone who has more significant assets and who understands that there's going to be a taxable event on their death, and there's going to be money that's got to go to CRA, and they want to go out and they want to get an insurance policy so that they can start paying today,
Yes.
so that when they pass, they've got enough insurance sitting there to satisfy what they owe CRA.
Yep.
Is that something that you deal with, that you work with people on?
Definitely. That's actually, I think, at least half of our business is there, right? So there's term is one side, and then there's this side, which is in the whole life conversation. But really, look, no matter what, no matter who you are, you got, when at a loss of life, there's taxes to be paid. Okay, everything that you own is pretend sold. Okay, and then there's a bill that's due to the CRA because it's all income. So you got options now. Either your family will use the cash that you have left over, or they'll sell some stuff and pay that bill for you, or you can just chip away at it while you're alive. Buy a life insurance policy, chipping away at it, and then the life insurance policy pays, and you give that to the CRA, and then your family keeps everything. That's the point. So we call it taking care of business while you're alive. Take care of your business.
Yeah, absolutely. Yeah, I think I think the important thing, the big takeaway, is people should just start the process of learning about life insurance. I mean, I hope, hopefully for anyone who watches this was a good start, just to understand, 30,000 foot view. There's different products out there. It's not one size fits all. There's some things that are right for one person. There's a different option that's right for someone else. Not everyone needs $1 million policy. Not everyone needs a $2 million policy. It's about starting the process of understanding what's the purpose of this insurance. How much do I need? How long do I want it to last for? And get comfortable with the idea that it, as you said, it's taking care of business during your lifetime to have certain peace of mind that if something bad were to happen, you put things in place to protect the people you love.
Exactly. And you know what? It's just easier and faster. And, I don't want to go into any horror stories, but the thing is, when you get some kind of policy like this, everything gets taken care of in a week. For the most part, it's all settled. And then you allow your family to do what they need to do. So I think it's just good sense, good life sense.
Okay, I see we only have a few minutes left, but I want to ask one more question because
Sure.
of something that you just said. How often do you find that someone comes in looking to start a conversation or looking to buy life insurance as a result of someone else passing without it?
Oh, that actually, so on social, that's probably one of the biggest reasons that people reach out, because they've experienced something or they've heard something. But I'll speak from, we do some marketing online, so people call in. Daniel, anecdotally, at least 30 or 40% say, I just had somebody pass. It's wild. It's wild, the number. And sometimes we think they're calling about something else, and then we ask and we say, so what has you looking into life insurance today? It's one of the first questions we ask.
Yeah.
And they say, this person went or this person went. And actually, I'll say this. Just a couple of weeks ago, I had somebody on my Facebook reach out with a GoFundMe. And it was the first time it happened. Like, I've always heard the stories. People say GoFundMe isn't an insurance policy. It's the first time it happened. And I couldn't believe it. This person is in my circle. And, I took it personally, right? Because maybe I should have had the conversation. But, it happens often, man.
Yeah, I mean, we find that too. We did sort of a customer survey a little while back to understand sort of some people's motivations around getting your will in place. And a surprising number of people had experienced some sort of loss in the previous year that motivated them to say, I don't want that to be the outcome for me. I don't want sort of the people in my life to have to experience what either I experienced or what I've seen others experience. And it's really it's a big driver for sure.
Yeah, exactly.
Okay, so I see we got a minute left. I just want to thank you
fun.
so much. Yeah, this was great. 30 minutes goes by quick.
It was.
But no, this was wonderful. Really enjoyed having you on. Really enjoyed our conversation. I think this is going to be really helpful for a lot of people. And if all it does is motivate them to go online and start reading and learning and taking that very first step in the journey to figuring out what they should be doing and starting an important conversation. That's really the goal here. The same way for us, that's sort of the goal around estate planning is just start somewhere, educate yourself a little bit, start to walk down a path and find what's right for you.
Yeah, I
I'll leave
echo
you
that
with the
100%.
last word. Is there anything that you want to say? Any
Thanks.
takeaways?
Thanks for having me. I think it was a blast. I hope you'll invite me again, and we'll take it from there. But for anybody, reach out to Epilogue, reach out to us, company's longevity again, and I'd be happy to answer anything you need. No obligation, ever. Um, we'll just talk.
Awesome. Thank you so
Yeah,
much, Al.
my pleasure.
Enjoy the weekend.
Bye.